in whether that's global standards, but also national policy and regulatory architecture, that now means there's a lot more information that is available. There's a lot more standardisation of the types of information that needs to be reported, and from a financial institution perspective, a lot more information that they are able to capture and use in their decision-making frameworks. So for us, it's interesting to have information available. What matters is how you use that information and how that information is used in decisions that ultimately drive capital towards stronger climate and nature outcomes. And I think that we're starting to see more of that happening rather than just the provision of information.
And see, I found another mic. Isn't that clever? With the Capitals Coalition, so we bring together around 13,000 organizations around the world that are looking at this concept of impact. So how do they connect? So this ranges from IMF, World Bank to governments. We ran a government dialogue with about 50 governments. There's about 100 governments now applying the UN system of environmental economic accounts, which we connect to, down through financial layers. There's been a lot of work in finance more recently, particularly in the banking space, and in reinsurance rather than insurance, which is fascinating. But also we originally started with corporates. So there's been a lot of corporates. We think in the region of about 7% of the world's corporates have done some form of impact assessment on the back of an envelope, a calculation, and about 26% of the S&P 500 have been working with us. So this isn't a new topic. It's been around for many, many years, the idea about what is my impact, what is my dependency. The work that we did originally back in 2012 after Rio Plus 20, where we connected up all the different approaches at the time, there were 40 different approaches. When we did that work, that led to the Natural Capital Protocol being released. At the time, there probably wasn't another approach. Everyone looked at that. But as with all of these things, lots of people started developing new ideas, new mechanisms from that, and that spread. And that was really positive. From that, though, came the Task Force for Nature-Related Financial Disclosures. And this last week, you're probably all picked up, that work has now been taken into the IFRS, into the International Federation of Accounting, into the Sustainability Standards Board. So the work is now becoming standardized, and I think that's a big change over the last few years, that actually we've been building a movement, we've been looking at creating a space, we've been trying new methodologies, and that was all growing out, and now what we're doing is we're consolidating that into standards, which is why it's really important that Noelia is here and the ISO standards that they do and how that's going to relate. So Noelia, there's in the standards at the moment, there's already talk from the TNFD, which came out of our work, for that to go into a standard with ISO. We've also had an accounting for natural capital standard recently. The purpose standard has capitals as its base to it. And there's other standards as well around climate accounting and things that are coming through. Can you just tell us a little bit more depth about where those standards are coming from and what they're trying to do?
Thank you, Mark, for this question. But for disclosure purposes, I'm not an accountant, not a financial, so bear with me. But I will really try to explain maybe with easier words what is all this about and what our standards from ISO in that area are about. I am actually more a development economist, so I do care about impact and how environmental and social aspects link to economic growth and how all this has to come together. So probably I will bring more of that lens to the discussion. But yeah, indeed, we have different work going on at ISO with standards that played a very important role in advancing impact accounting. I will focus today on 3 because ISO has 25,000 standards. I will not bore you with the whole list, but I thought for the discussion there are 3 that I would really like to put the focus on. The first one is, sorry for the numbers, ISO 14054, which is been really recently released. And that particular standards look at natural capital accounting for organizations. So that standard is about how can organizations methodologically develop natural capital accounts. So including capital, natural capital income statements, and balance sheets. So what is really important about that particular standard is actually probably the process itself that offers to the organizations in terms of how a company can follow impact and dependencies pathways. So it doesn't give a specific pathway, but a guide on how to look at those pathways from an organization perspective, and then identify, measure, and value their impacts and dependencies on a nature from a financial perspective, looking at these pathways. And then once done that, monetize the effects when it's appropriate. So again, this is more of an accounting perspective on how to look at the impacts of an organization and how we can then reflect those in our accounts, basically, in our financial balance sheets. So that's why this is important, because it helps the decision makers of organizations understand their business performance and how it relates to natural systems. Then we have another standard that is currently ongoing, which is looking at net zero transition planning for financial institutions. And the number, ISO 32212. So that's focus on sustainable finance. The scope of that standard is a little bit different. What it seeks to do is to provide guidance specifically to financial institutions. So the previous one is for any organization to assess the impacts and dependencies on nature and bring them to the balance sheet. This one is specifically for financial institutions and to guide their investments to support transition planning. So that's the scope of ISO 32212. It does not give specific targets or specific sector pathways, but it does explain what a transition plan should cover. So it's agnostic in terms of regulatory regimes, geography, or business models, so it's applicable across sizes and jurisdictions. And then there is another standard that we released at the beginning of October in Kigali, where ISO hosted its annual meeting, which is our first standard on biodiversity. The number? ISO 17298. That's even a more complicated one. This one is probably more similar to other standards in ISO in the sense that this standard is about the operations of the organization. So first standard about bringing nature to financials and to the balance sheet. The second one specific for financial institutions. And now this one is for any organization that wants to consider biodiversity in its operations, in its strategy. So here we are talking about the plan and the act piece of what our organization does, whereas the one on natural capital was more on maybe on the financial reporting piece of what an organization does. So the standard on nature capital, the standard on biodiversity, they are really linked because they really look at nature and they create a coherent ecosystem. And then we have the standard for sustainable finance, which is more specific to net zero and more specific to financial institutions. I hope that gives more or less a clear picture on our current work.
For me, being that I come from an accountancy background, the numbers make more sense sometimes than the words. So actually 17,298 makes a lot of sense to me.
And not the rest.
And not the rest. And also, if you add up all of those numbers, do you know what you get? No, I haven't worked it out yet either. I'm sure Rain has, the CFO here. So there's lots of work going on. I think the good news is that there's lots of work coming through as voluntary standards that can be used by companies to be able to help them to take action on this. How does this actually come together within a company, though? Because I mean, you spend a lot of time engaging with different organizations that are applying this. How do those standards actually get played out in reality?
So, I mean, what is important to understand is although we have a large portfolio of standards, they are not really independent one of the other. Very often, one standard will reference another standard, and that's the case here. So that it helps organizations putting those together. Now, from the standards perspective, the objective is really to give very clear step-by-step guidance to organizations. So we often need to go like very at the micro level, and then that's why we will get many different standards throughout the value chain of an organization, and that's how they play out, right? They are connected. The committees that develop those standards connect. They are liaisons among each other to exchange information to make sure that one standard builds on the other, and then so that when the organization needs to implement them, they can put the dealer pieces together. Basically, like it will be like one standard. I mean, I'm simplifying quite a lot the situation, but it's almost like one standard for every piece of the value chain of the organization.
Sorry, I turned the mic off to stop the feedback. The good news is, and just to be clear about how our work fits into this, so we've been developing for many years harmonizing activities, and on the 14,054, the natural capital one that was done, on that one, a lot of the people involved were from our community that had been doing the work voluntarily in harmonization. They've been working in businesses, and what they then did is they came to ISO, and ISO has then developed a standard that people can follow. Now, what we're doing at the coalition now, Capitals Coalition, is we're developing standards, but for the regulatory market. So we're going to be now creating some standards that are not for corporates to apply, but are for the regulators. So the standardization of those processes. And the reason why we're sitting so close together is that because we want there to be consistency in the way that these things are being developed. There's two different processes. We've got an international body, an independent body, and we're going to work through the accountancy IFRS to develop ours. But that has to be consistent with what businesses are doing day by day. Both have due process, both are independent, both can't be influenced, but we need to work together to make sure there's consistency in that. So maybe I can come to Christy now. I'll hand you that one. I'll take this one. That's better. So maybe you can just give us a little bit more background into the Australian Sustainable Finance Initiative and what you're doing there. I mean, you were one of the first markets to start bringing in carbon trading and all of these other things that you're sort of leading on in Australia. In fact, one of our board at the moment used to say that they used to come to the UK to learn. Now they're coming to the UK to teach the UK about what's going on, which I think is very fascinating. So maybe you can tell us a little bit more about what you've been doing and how that might relate into where we need these standards going forward.
Yeah, happy to. And I think Australia is a good story of the ability to be fast followers and sort of the benefit that comes from that. And as you say, learn from others has enabled us to kind of accelerate fairly quickly. But probably 4 years ago when we were established, we didn't have kind of the architecture or the appetite, particularly from the policy side, but there was a lot of interest and sort of voluntary ambition from corporates and from financial institutions. And ASFI was established by some of Australia's biggest superannuation funds, which is pension funds, banks, insurers and financial services companies who recognised that there was the need to support the growth and credibility of sustainable finance. And when I say sustainable finance, that means kind of integrating sustainability into financial decision making that financial institutions are making, whether that's kind of capital allocation, pricing or assessing risk of particular opportunities, structuring new products, so all aspects of the way that the financial institutions do their business. We were established 4 years ago, very much have been this bridge between the finance sector and government, and demonstrated that there is strong, large-scale commercial finance sector support for the government adopting and bringing in stronger kind of guidance and regulation to start with climate-related disclosures, but using that very much as a framework and a backbone to integrate other sustainability issues into sustainability reporting in the Australian context, and building out the rest of the architecture from there. So we now have in place mandatory climate-related disclosures. So Australia has adopted S2 from the ISSB and has adopted S1 voluntarily. And to your point about the value and benefit of global standards, Australia is a relatively small open market. It matters to us what the rest of the world is doing. We're not big enough to be necessarily the big gorilla in the room who sets the standards, and so global standards matter. We will always kind of adopt global standards, and then may make small tweaks based on Australian circumstances. So we've very much done that with S2, and having the ISSB set those standards has given the Australian government, the confidence that we're not going in a different direction to the rest of the world on these kind of issues. The other work that ASFI has very much been working on is development of a taxonomy for Australia, and the taxonomy has been very strongly supported by corporates, but particularly by financial institutions, to support them to identify those assets and activities that will achieve climate mitigation outcomes. And again, to this point about standardisation, everyone was currently using a whole range of different assessment methodologies when they said, we have an ambition to put 200 billion, 500 billion, whatever it is, into sustainable finance in the next 3 to 5 years, but have all been using slightly different categorisations and groupings of activities to fit within that sustainable finance bucket. A taxonomy gives them not only kind of credibility and comparability between those sustainable finance targets, it enables them to look across, if you're a bank, across your loan book, not just to those things that are sustainability linked bonds or green bonds, and say, actually, there's a whole lot of stuff in our vanilla book that is consistent with the taxonomy. We're actually doing a lot more than we thought. We can actually up by 2 or 3-fold the level of ambition that our board will sign off on for this stuff. And importantly, it gives them an independent set of what good looks like for them to talk to their clients. That sort of bank-client relationship is sometimes an incredibly impactful one, but it can be a tricky one as well. Banks are there to serve their clients, and having sort of external market-agreed standards about where that client should be investing their capex to achieve climate and nature outcomes is very helpful for banks to support customers on that journey as well.
When it seems to me at the moment, with many of the financial institutions, that there's a level of wanting to reinvent it themselves. I mean, finance as a whole makes its money by coming up with products and services that its competitors don't have, and then trying to sell those into markets. And it seems to me that they're doing the same thing with all of this work on the methods. I mean, every bank I speak to has its own method of accounting for things. Am I being rude about your sector, or is this true?
No, not at all. I think there is areas where there should be innovation. I think that's in the product space, and that is absolutely valuable to be getting the capital flowing in the time frame, but also in the type of capital that is needed for kind of the business or the community group, or whoever is doing the activities on the ground. So that's where I think innovation is important. Innovation across standards and methodologies, I think, is part of this let every flower bloom, and the sort of relatively early stage of this. As you said, what's happening globally is this now coalescence and standardisation, and I think we're going to see that happening within the financial sector as well, because a board will say, why aren't we using the same as all of our peers? And it's a sector where there's intense competition, but I would also say quite intense herd behaviour, and so if there's competitive value in not being an outlier, I guess, and standards is definitely an area where there's...
We do an annual survey of many people in our community, and in that, the biggest barrier to being able to get to better understanding, by far, about 2/3 of the people said it was confidence. And actually, I think this is really interesting when we're talking about standardization, because it wasn't that it wasn't technically possible to do these things. It wasn't that they didn't realize it was important to do these things. It wasn't even that they can get the money to do some of these things. It was actually the confidence to actually follow through with it. And then the money won't flow completely. You won't get people to do it. So the whole thing for us at the moment, I think, is about building those structures, the governance, the belief in it all. And this is a bit of I do have 2 parents who are accountants. All financial numbers are made up, okay? I know there's a CFO over there. But they are, okay? So what happens with a set of accounts from a company is they go out there and they collect certain information and then they put it together, and that becomes the profit and the loss. That becomes the balance sheet. But you have to look to the other pages after that to say what they didn't include that week, what they didn't include, what they have included instead of, and that's what tells the story. Accountants are just telling stories through numbers, where you have other people in the company selling stories in other ways. So if they're made up numbers, and we take that, then that means that all of the work that we're doing on the sustainability side, we just need to build the confidence so that people can trust that as well. And it took 300 or 400 years for accounting to become accepted. We've got to do that a lot quicker here. So on the ISO work then, how do you see, how do you see this relating from, we're talking about regulatory markets here, a lot of the work you're doing voluntarily in voluntary markets. How do you see the work going forward for ISO and trying to have a stronger connection, or some of the work that you're doing on the ISO standards finally moving into the regulatory sphere?
Thank you. The first thing to say is, and I see it actually very much when I come to COP, the first thing to realize is the development of standards from the ISO perspective, the way we develop standards based on a multi-stakeholder consensus model is actually very similar to what's going on here, to the process of policy making, consensus-based here. The concept of consensus changes a little bit from the policy side than ours. So for us, it's not unanimity, but still, there are big parallels. And I think sometimes people don't understand that. So already from there, the tools that we develop at ISO, international standards based on that particular model, are really suitable for supporting policy processes. I always say, what happens here is finding consensus on the what. What do we want to achieve? What is that objective? I think the piece that is missing is how do we get there? And well, we are talking these days here about implementation, action, etc. And what I see standards coming in the picture is actually harmonizing the how to. You were just saying this all made up, but they just agree, all of them, on one way of making those numbers up, right? So that's pretty much the same. So where international standards come is we are harmonizing. You policymakers give us the objective, give us the goal, what we are trying to achieve. International standards are going to give you an harmonized way for all countries on how to get there. So international standards, even if they are voluntary in origin, and why they are all voluntary in origin? Because they are not developed to set policy objectives. That's why they are voluntary. But they can support policy objectives in the way they have just explained. So that's for me how they relate. Then how do we do that, and how we are trying to link those things besides being here at COP with the Standards Pavilion and raising awareness is through our national standards bodies. We have one national standard body in every country. It's the officially recognized standards body in each country. And they are sometimes government agencies, sometimes not, but with always very strong links to government. So that's how we do it. Members take the international standard, they can adopt it at the national level. They can do adjustments if needed to the national context and work together with their policymakers to bring that to the implementation phase of any policy. So that's how we are doing it.
And one of the things we released this year was the integrated decision-making framework. So this is linking lots of different topics together and trying to look at the interplay between them, the feedback loops, rather than looking at issues individually. And what I'm picking up actually in lots of the conversations I'm having over last week in Sao Paulo and here already is actually this integration point. It's not relevant to necessarily just look at climate, that you have to look at the nature interplay, the interplay with people as well, with all of that. Has there been any thought about that at ISO? Because obviously you've got all these 25 well, I can't even remember the number, but you've got so many different standards. But are there standards now coming through about how they integrate with each other?
Not yet, but we are start looking at it. So after the London Declaration, which is the ISO climate commitment, where all of our members and technical community agreed to make sure that climate science is brought throughout the development of all our standards and revisions of those. We very quickly realized climate is not an isolated aspect, right? Like we really need to look at those interrelations. So it's work in progress, let's say. Like the creation of the Committee on Biodiversity is already a strong one, with links between the work going on biodiversity and the work going on climate. Work around circular economy also, that's another piece of ISO's work or portfolio that is looking at those interlinks. So work in progress would be that my response.
And in fact, I was on the phone to the SAC, the Chinese ISO body this morning, talking about a value standard that would link the capitals together there that might be coming up for debate quite soon.
Exactly.
Yeah. Can I ask Christy then? We should have sat in a different way, shouldn't we? This is. What about integration for you then? Because I mean, the climate story is where you've been leading on, but is there talk? I mean, with the Nature COP, that's when we first met at the Nature Positive Summit last year. The next one's going to be in Japan. I hope you're going to come to that one as well. Yeah. Beautiful place in Japan, actually, Kumamoto. So, but we're going to be doing that next July. But what about the integration of these topics? Are you finding that as well?
So this is something we've pushed really hard for, the integration, and think for particularly as the policy and regulatory architecture in Australia has evolved, for that to be more than just climate. Unfortunately, there are some parts of government that need to kind of bite off a little bit and finish that and then bite off a little bit more. That's actually not how companies and financial institutions are thinking about it in the real world, so it's not particularly helpful, that very step-by-step sequencing approach that the Australian government has taken. And that has meant that for the taxonomy, for example, we've only got climate mitigation criteria at the moment. For many sectors, particularly like the land sector and things like sustainable agriculture, there are climate mitigation, resilience, as well as nature benefits of many of the same practices. So we as ASFI have demonstrated the value and the benefit of integrating those issues, but that's not something necessarily that our policy and our quite siloed bureaucratic structure enables, I would say, in Australia, unfortunately.
I worked in business for 20 years before doing this, and you'd never make a decision just on one data set. I mean, that would be ridiculous in a business. You'd always make sure you have better information, but it feels like it is maturing over time, do you think?
I think it is, and definitely on the kind of financial institution corporate side, that's maturing. And I think the introduction of mandatory climate-related disclosures has made things a little slower, that integrated thinking, I would say, because attention, effort and resources are being poured at the moment into mandatory reporting. I think that's a point in time, and that will broaden back out and evolve again, because the interconnection of those issues in real life doesn't stop just because you have to do a report just focused on climate.
No. Can we open this up now? Do people have things they want to comment on, have been said, or ask some questions, or talk about the work they're doing? Yeah.
Thank you so much. It's a very insightful discussion. A lot to unpack, I would say. But I wanted to ask Chrissy a question, really more an advice question from Australia's perspective as a developed country, and obviously recognizing that developed countries and developing countries come from very different contexts. What advice would you give or would you offer to policymakers in those settings who are looking to build capacity and accelerate the adoption of impact accounting within their financial systems? And which type of policy signals or incentives you think could make the most practical difference early on in these contexts?
That's a great question. And something that I didn't mention that Australia is doing, which is governments kind of reporting on, they call it measure of what matters. So essentially not just financial budgets and the accounting, like the financial accounts of Australia, but also reporting on key indicators in a more holistic fashion. And if I think of like a very early indicator, government reporting in that more holistic way about what matters to the country can set a signal for other business and corporates. That didn't happen first in Australia, but I think that leadership from government before, soft signalling, these are the types of global frameworks that we would encourage or support businesses using. The Australian government's done a lot of work on capacity building around TNFD, the nature-related framework, and that has been hugely useful in building just understanding of those issues across the business and private sector. So there's some kind of soft signalling ways that government can make sure that there is the capacity and the understanding of the value, like the business value of those types of mechanisms and accounting frameworks for business before they go kind of down the stronger regulatory route, I would say.
I have a question for you as well. Because as I was saying at the beginning, I'm not an accountant and not on the financial sector, and ISO standards are mainly focused on what I was saying before, the plan and the act part of any organization. So when the organization is developing its strategy, how do we consider all these objectives in the different levels of the operation throughout the value chain? How do we measure that? That's where ISO is really active on. I feel though today that, and then on the other side, a lot is happening on the financial side, reporting, a lot of harmonization going on with the work of IFRS and others. But I feel that these things are disconnected today. How I would like to see how do you see that, and if you will have any ideas on how we could connect them better.
Yeah, it's interesting because I think ISO standards are not traditionally thought of or applied within the finance sector. Like they seem to be much more, and maybe this is just in Australia, I don't know in terms of their adoption globally, but much more for, safety standards or product quality standards or those kind of, let's call them widgets rather than...
Is that because financial markets is probably one of the highest regulated of all sectors? I mean, when you look at farming or you look at any other sector, it's not as regulated as finance. So is that why, ISO traditionally is only now starting to look more at the financial markets. Would that be a reason why?
Yeah, but probably also because everything that's going on the financials and like in the financial market looking at sustainability, because we do also, you are right, we have performance standards, very technical standards on how things should work, to make sure that they are safe, that they ensure the health of people. But we also have management system standards. So really about driving the operations of organizations. And that's the piece, in my opinion, that really will make sense to connect better to the reporting side. So yes, it's related, of course, it's more regulated. But then now with all the last progress in the last years on bringing sustainability to the financial market, we are bringing sustainability to the operations of organizations. How do we link that better?
Would be very keen to have a conversation because I think part of it does go to this.
I think you are.
That's right. Everyone else can just be a part of it. Fantastic. Any other ideas? Very welcome. But I do think part of it is the highly regulated nature and the way that in many developed markets in particular, financial sector regulators will, be relatively heavy-handed in the way that they undertake their supervisory kind of capabilities. And so in the Australian context, financial institutions don't feel able to rely on voluntary global standards because there is, even if it's only at a principles level, a lot of regulatory guidance from prudential and competition regulators in Australia.
So I just got one more quickly, then you can come in. So there's quite a bit of movement in the legal space as well. There's the true and fair movement. I don't know whether you've heard of this, but true and fair is an idea that in regulations there's already a requirement under Companies Act that companies have to give a true and fair representation of their accounts. And several lawyers have come forward and said, well, it's not true and fair if you're not including nature and people in the accounts. So actually they're breaking the present rules. And in the investor market, there's all the work that Generation did with PRI on investors' duties. Actually, it's a requirement for them to do this. And in fact, we've even had a couple of lawyers come to us recently and say that banks might be falling foul of the present prudential regulations because they're not including all of the capital's work. What's your view on that? I mean, because it may not be that we need to change any regulations, it may just be the application of these regulations.
Yeah, and that issue of directors' duties and the extension of directors' duties, not just to climate but to nature and to some of these other areas, is something that's had quite a bit of airtime in Australia. There are, I would say the director community is one of the most conservative communities in many countries, and so there is a range of different legal opinions, and then there's a range of different ways that different people can interpret those legal opinions based on kind of their views and their training and a whole range of other things. So I tend to agree that the existing law probably provides the signals to those who want to take them. So then it goes to how do regulators sort of back in those signals. It doesn't need to be overt, but there's in Australia a strong culture of regulatory compliance, even if it's only soft kind of signals from a regulator.
We've just completed a merger and I've been talking to lawyers a lot, and what I've learnt is if you get 2 lawyers in a room, you get 4 opinions. That's what, and they charge you for each one of them.
Hello, it's probably just a follow-on question around this idea around financial markets and ISO standards. Are you talking to the accounting standards bodies as well, and ISO, and how that works together?
We are trying. that's the simple and sincere truth, because for what we have discussed, I think it's probably the accounting community does not understand, and they see that ISO standards and what we do as a really separate job. But I really believe that we should link them. But yeah,
I think
work in progress as well.
Well, and that part of talking to us is helping with that. I think.
Indeed.
I think also when we did the session yesterday with the ISSB, Elizabeth, the board member there, was saying that it's really important we have the ISSB, the Sustainability Standards Board, because it's different to the IASB. IASB, the accounting looks backwards. Sustainability was trying to look forwards, was the difference. But at some point, I think that these things do need to be all connected. You can't have the back end and the front end of an annual report being separate and not connected. And that's why they both come underneath the IFRS, underneath one body. But actually, there's even talk at the moment about a third one, which might be on impact in our work. And I'm pushing back on that and saying, no, our work should be embedded in through both of those things. It shouldn't be something, a third pillar in there.
We do talk a lot also with IFRS and about and ISSB around. We do have discussions though with ISSB around these topics. Also, the biodiversity standard I mentioned before, it's aligned with TNFD.
The number is 17,298.
Whatever.
Sorry. Rangers call me a loser. Okay. I've thrown myself again now. Louise, did you want to say something?
Yeah, it's a question. So we have been working internally about managing knowledge flow to really support the uptake of ISO and other standards, and also to move regulation forwards, right? So I was really interested about what you mentioned about the mandatory disclosure being adopted by Australian government around S1 and S2, and just to think a bit together and also to hear about your position, because ISO is voluntary, so it's build a case from implementation, so it shows somewhere the innovation and the way we should go and how leaders are doing the work. But we know that we will move really with the speed and the scale that is needed to meet the climate and the nature ambition only with also strong regulation. So can you just elaborate a bit more on how this happened in Australia, and how this can be also an example that maybe other government and other part of the world can follow to have more mandatory disclosure?
In terms of how it happened, so there was a change in government and there was opportunity that a very broad and I would say strong coalition of business and finance groups got behind and made the political space for that to be a very easy win. So when there's and I still remember talking to a senior Treasury official who said, it is very unusual to have business groups and financial institutions come in here and ask for more regulation. This is unheard of. And so it was that element of very broad-based, very vocal support and making it kind of a no-brainer for an early action of a government that came in with an agenda that was much more kind of pro-climate and recognised the need to catch up to where other jurisdictions around the world were. In terms of, there was also the ability to be quite pragmatic in how it's flowing in. So starting with the very, very biggest companies and getting phased in over 3 years with some kind of almost safe harbour provisions so that only the regulator can take enforcement action in the first 3 years, so it's no third-party enforcement. So creating kind of a bit of a sandbox for companies to feel much more comfortable in doing the reporting. And then there has been, obviously, the ISSB standards made it much easier. We didn't need to do the technical work ourselves. We were able to, our standard setter was able to adopt largely what the ISSB had produced. That coupled with what was growing and sort of, I think it was maybe 70% of the biggest companies were already using the TCFD to report some elements of the TCFD framework. So the argument from business and finance was companies are doing this, but they're being asked for the information in a range of different forms. This provides a standardised format and actually reduces the burden for companies. So there was this alignment between investors and companies for bringing it in as a mandatory. It would be interesting in kind of 2 years to go back and ask everyone if they would still support bringing it in. Maybe too early to say at the moment, but I think those arguments really worked well for government.
Obviously, we can't, though, rely on waiting for the right government to be in place, and we've seen in some places in the world that's pushing back, although it does help other countries sometimes to get the votes through. You mentioned there about the information, though. One of the projects we've sort of incubated over the last few years is the digitalization of sustainability data, which led to the same taxonomy now being used by the ISSB, by the EU, and by GRI, which is really important that we don't have multiple reporting things. What's the role of data? And it couldn't really be a conversation without talking about AI at some point. But what is the role? Because that's changing. When we were looking at doing an integrated approach, to be honest, if we'd have released this framework 5 years ago, no one could have applied it because you couldn't collect that much information across all of these different areas and put it all into a way that would make sense to be able to make a decision. So the machine learning is an essential element in this with all its problems as well. But how does that fit in with what you're talking about? And then maybe you can talk about data afterwards as well.
Yeah, it's a golden opportunity for digital reporting at a time where you're introducing and expanding the pool of companies that are reporting. Unfortunately, it's not something that our regulator has jumped into with further. Rain might want to talk a bit more about it, but I entirely agree. You need to be taking advantage of that digitisation.
I can just talk to the I sit on the AICD Reporting Council and there's CA-ANZ with the Chartered Accountants. So the Company Directors Reporting Council and the Chartered Accountants, which is a premier accounting body. So for my sins, I sit on both of those councils. 6 months ago, they were holding off on digital. We're one of the only developed countries without digital reporting in Australia. And it was mostly the CFOs going, it's too much work, we don't want to do it, blah, blah, blah. In 6 months, that's totally changed around where they're actually pushing for it now because of the sustainability requirements. And the annual reports in Australia have got to ridiculous lengths. And they're saying, how do we actually make this more user-friendly? And they think they can do that through digital reporting. So there's a real push now from the accountants that have to do it but also the company directors are getting behind it. And that wasn't there 6 months ago, which is really cool, right? And they also know nature's coming. So it's on their agenda that the Australian government's been really clear, climate first, nature to follow. So they're all watching TNFD really closely. So that announcement was really promising last week. And I was just going to say one other thing, sorry. I think in Australia, we're actually one of the most regulated financial systems in the world. And that came to bear when the global financial crisis happened, that we were pretty isolated from a lot of the shocks because we had a really strong system. So we've got a long culture of regulation, and we know that protects us, I'd say. So it doesn't surprise me that business say, I want more. They also say we want less red tape and less regulation, but they also know that makes it, I think we got one of the biggest superannuation pools of money in the world per capita. So we have compulsory superannuation. So everyone in Australia is empowered to ask their super fund to do it better, to move their money around. So that actually creates the investor, I believe, the investor pull through for that information.
And just to be clear, a super fund like that is about the pension. So everyone's paying into a pension, which then is it is one of the biggest in the world, that then makes big allocations of funding. So that makes a big difference. And I know that in other places in Europe now, they're looking at using some of those super funds in the way that Australia's been doing. What about data for ISO then? I mean, you must have data standards for a start.
Oh, yes. Actually, we have just gone through the process of mapping our standards on environmental data. So more than 1,100 something. And it's available actually, and we have done it with Australian colleagues actually. So with the Standards Australia colleagues, that's available online, and it's a platform where you can filter and explore. Because we do have a number of, it's a set of standards on the operational side of the data collection, because it is important indeed. The quantity of data, the quality of data, and how this data is transferred. And at some point also, we will need to discuss the same thing, like how then this links to the data needed at the financial level. So this mapping, and it's easy to find, is ISO environmental data, and the methodology that we have used is available actually for any other standards organization that would like to do the same exercise could use. We have mapped those standards using the discussions on the development of a global environmental data strategy that are currently ongoing in the United Nations environmental program. So yeah, quite some work done there as well.
Brilliant. Well, thank you very much all for coming to this roundtable. I think the message here is clear, is that actually we're going through a period where we're consolidating a lot of the things that we've been doing over the last 10, 15 years. They're starting to come together. There's organizations with a wealth of experience like ISO that are doing it. The regulatory markets are doing it as well. And there's many of us in all of these other hubs around here today that are working on harmonizing. I think one of the things with standardization is you can standardize many things. You can standardize a chair, you can standardize process, you can standardize words, you can standardize, and sometimes we just bring it back down to being about disclosure in the standards and the sustainability space. It isn't just about disclosure. Disclosure is just one element of it. Standardization needs to come in around the data, around every part of that process. One of the next things in 15 minutes here, actually, there will be the sort of kickoff of the Nature Measurement Protocol. So in the same way as the GHG protocol was developed, all of the work that's been done over the last 20 odd years, and including hopefully all of the ISO standards, are trying to come together in an equal approach called the Nature Measurement Protocol that we've been involved in setting up. So there'll be a conversation here in a minute about that in 15 minutes. But thank you very much for coming, and speak to you all again soon, hopefully.
Thank you.